Welcome to the WTR Small Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's Flashcast, I'm joined by my colleague and WTR Senior Energy Transition and Sustainable Investing Analyst, Peter Gastreich. Peter will share some insights from his initiation of coverage report on ClearSign Technologies, NASDAQ ticker symbol CLIR. Good morning, Peter, and thanks for joining.
Morning, Tim. It's great to be here.
So, Peter, let's kick things off with the basics. What does ClearSign do, and why should investors be paying attention?
Well, ClearSign makes advanced industrial burners for oil refineries, petrochemical plants, and midstream operators. These burners produce far less NOx pollution than anything else on the market. A key hook is that the demand driver is NOx regulation, not carbon policy. And that distinction is important for investors to understand. NOx rules are rooted in public health law. They've been tightening for decades and are completely unaffected by changes in climate policy. So at the end of the day, operators must comply or face fines and shutdowns, and it's a non-discretionary market. Very important to understand that.
Thanks for that delineation. Can you tell us more about what's driving the regulatory cycle right now?
Well, California is the pace setter, and it's where ClearSign has already earned 2 formal best available control technology designations, which is the gold standard in terms of emissions permitting. LA-based refineries face some of the world's strictest NOx limits, and ClearSign is essentially the only way to get there without extremely expensive add-on systems. Texas is the next wave, with the Houston-Galveston area actively tightening. Behind that, you have Salt Lake City, Pennsylvania, Colorado, and eventually Europe. It's really a multi-decade compounding cycle here, Tim.
I'm curious, what makes ClearSign's technology fundamentally different from the other players?
Most industrial burners tackle only one of the 2 chemical pathways that create NOx. ClearSign addresses both of them, which frequently eliminates the need for costly post-combustion treatment systems entirely. The cost difference is dramatic. On a recent supermajor project, the conventional compliance option was estimated at roughly $50 million. ClearSign's total installed cost was estimated at roughly $50 million. ClearSign's total installed cost came in at a fraction of that, at an 80% cost advantage on a single heater that gets refinery engineers' attention, very fast.
Putting on my investor hat for a second, Peter, how large is the TAM, or total addressable market?
It is substantial and growing. The near-term focus is refineries and petrochemical plants in California and Texas, as I mentioned. There you have tens of thousands of burners, which will need upgrading over the next compliance cycle. ClearSign just commercialized new burner geometries that management believes will expand their reachable market by 20 to 25% and open entry into ethylene production. Ethylene is a whole additional market, roughly the size of refining. So that alone pretty much doubles the opportunity set. Extend that globally, and the long run opportunity is very large.
What can you tell us about the Gen 2 burner and why it matters?
The Gen 2 achieves ultra low NOx across the full spectrum from natural gas to pure hydrogen. That matters because as refineries blend more hydrogen to decarbonize, NOx from existing burners actually goes up. So heaters in compliance today can fall out just by changing fuel mix. ClearSign's Gen 2 stays compliant through that entire transition, creating what we see as a second demand wave on top of the baseline trajectory driver. An industry demo day in April drew major refineries and national energy companies, and the feedback was very strong.
So I noticed a reference to Zeeco. Who is Zeeco, and how central are they to the ClearSign business model?
Well, Zeeco is one of the world's 2 largest combustion equipment manufacturers, and it's based in Tulsa, which is why ClearSign itself relocated there. They manufacture ClearSign's burners, host customer demonstrations at world-class test facilities, and sell ClearSign products as a co-branded offering through their global sales force. Critically, all that infrastructure sits on Zeeco's balance sheet. Orders come in with cash up front, so projects are largely self-funding. It's generally asset light model that scales very well.
I'm curious about their commercial pipeline and where that stands and what should investors be watching for moving forward with announcements.
Well, the pipeline is building well, around 225 burners worth of active proposals. The two headline engagements are large orders from a California supermajor and a Texas supermajor, both new geometries, both ahead of schedule. A major engineering firm is also channeling a series of projects from a single large refinery directly to ClearSign, which speaks to the company's growing reputation in the industry. The biggest near-term catalyst is the October 2026 Gulf Coast startup. Several prospective customers are explicitly waiting on that reference before they commit, Tim.
Okay. And then just wrapping things up, Peter, finally and frankly, very importantly, what is the financial picture and pathway to break even?
Well, ClearSign had its best revenue year ever in 2025, up around 44% year on year, extending 3 consecutive years of strong growth. Break even is tied to a specific burner run rate, and with orders now in the 30 plus unit range and the pipeline building, that milestone is becoming more realistic. So our forecasts show meaningful revenue growth and margin expansion over the next several years as that installed base compounds. We see the company hitting its first annual net profit in 2029 and rapidly scaling to exceed $30 million by 2031. For perspective, that level of net profit in 2031 exceeds the total current market cap of the company today. So the balance sheet is clean with a solid cash position and no long-term debt. And as mentioned, the projects and growth are structured to be largely self-funding. So that's a very good aspect of the company.
Great. Well, always good to have you on the podcast, Peter, and thank you for joining us today to discuss ClearSign Technologies. Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.